Right, hello and welcome back to another video. So this one being my February portfolio update. Hopefully this video will be quite good. I've had a bit of practice because I just recorded the entire thing and for some reason the sound didn't work, even though I tested it with a little video just before. So that's the fun of making videos. So I'm going to be looking at my screen quite often this time to double check that the sound is recording. Anyway, yeah, I'm quite practiced at it now. What I will say is I think we've got a few new subscribers from a few places, but mainly from Stockopedia, so welcome. And I would say if you haven't watched any of the videos before, or if you're not sure what the checklist is, I'm going to put a video, it'll be up here somewhere, which runs through my investing checklist. I'd recommend you watch that before coming back and watching these kind of update videos, because it will make a lot more sense in terms of how I arrive at the stocks that I'm buying and that are on my watch list. My checklist is effectively broken into two parts. Half of it is the financial side of the business, so looking at revenue growth, profits, margins, that type of thing. And half of it is the business fundamentals, so looking at kind of the moat of the business, the management, growth potential, that type of thing. And if to get onto my watch list, a stock or a company has to get a score of over 75 or above. So you'll see that on all of my Twitter posts as well, where I put a checklist score at the bottom. That's what that is about. And I'll also say to new people and existing viewers, because I imagine it can sometimes be confusing because I post about lots of stocks. The public portfolio has been going since the start of 2022, and everything since then that I've purchased or sold, maybe not sold, but as purchased, is in the public portfolio. However, I own other stocks outside of the public portfolio, and most of these were purchased before 2022. And the reason for separating them is it was the start of 2022 when I came up with my checklist system, where I actually started thinking properly about my investments and which stocks I was going to purchase. Before then, it was kind of just lucky dip. If I read a newspaper, if I read like a magazine article or watched a video on a certain stock and I liked the idea of it, I would buy it. There wouldn't be any real research involved. And quite a few of these stocks I actually still hold. So I still read about them and check up on them, and I'll do kind of earning snapshots and things on them. But that is the reason they're not included in the public portfolio, because they were not purchased with my checklist strategy. Right, enough rambling. You'd think I'd get more efficient at this second time round. Let's get on to the returns for February. So this is the performance for February, plus 2.82% for the portfolio versus the FTSE All Share minus 0.24%. So I'm pretty happy with that. We trounced the index. We did have a massive boost at the start of the month, which was mainly from Meta, when Meta went up 20% in one day. And that's the largest holding in my portfolio. So that did actually make quite a difference to the portfolio. And ever since then, we've kind of been bouncing along. I think my portfolio is quite balanced at the moment in terms of I'm not going to get any major moves, because I've got quite an equal split between US stocks and UK stocks. So when US is performing well, the UK normally isn't. And when the US retracts, the UK tends to perform a bit better. So it's going to be steady, I think. But 2.82% I'm happy with. And I think if that's compounded out, so for every 2 months, I get 2.82% through a year, that will be quite a decent return. Whether we can keep that rate going, I'm not sure. We will see. Just check the sound is still recording. And then for the year to date, we are plus 3.7% versus the All Share minus 1.63. So again, I'm pretty happy with that. It's a pretty steady, gradual rise. So nothing too drastic going on. Just the strategy is working, I think. So in terms of the actual portfolio, we've got 23% cash. So we've got still quite a bit to play with. And the valuation is 85k. I will say, so those legacy stocks that I mentioned, the ones that I owned from before 2022, I still own quite a few of them, because some of them I just got lucky with and they turned into quite good investments. And some of them are down a lot, but I was too stupid to sell them. And now they're at a level where I may as well not, there's like a few £100 worth, I may as well not sell them. I'll just wait to see if they do anything. But over time I will sell them, and those proceeds I will add to the public portfolio. So I'll mention it each month if I do. I haven't sold any the last couple of months, but when I do, cash will be added to the public portfolio, and I'll flag that. But the idea is that eventually I won't own anything that's not in the public portfolio. And then all time for the public portfolio. So as I say, at the start of 2022, we're up 16.55% versus the FTSE All Share minus 1.06%. So trouncing the All Share Index. If we did a comparison versus kind of the S&P 500, we wouldn't be doing as well. But that's the benchmark I've been using. And I'm fairly happy with that, considering I'm invested in US and UK stocks and I'm learning. I feel a bit more confident now than I did back here. But this whole time I've just been learning, experimenting with different strategies, reading lots of books, trying to educate myself, making lots of mistakes. So going through all of that to be up 16%, I'm happy with. Hopefully can improve it in future, but for now, I think that's quite good. And then this is an overview of my portfolio. Just minimize that for now. So this is ordered in percentage gain, so there's a lot of green on there. Meta, as I say, is my biggest position just because it's gone up so much. And we've got a few in the red. The only one that I'm actually concerned about is Impact's asset management being down 30%. My entries on this were not good at all. This was before I had what I now consider to be a fairly good entry strategy. And it's at an awkward position where, let me just bring up. So yeah, this is one that I've actually had for a long time. I bought it before. Did I? Before? Oh no, it was since the checklist. But I didn't have good entry strategy. So I was buying in a downtrend. It just continued down. I was averaging down. At the time, this was my strategy. And it's a viable strategy. I know a lot of people do it. I know some of the best investors of all time do it as well. But for my mentality, I now prefer to buy into strength, into momentum. But at the time, I was averaging down. So I'm reluctant to sell with my new selling rules just because it's kind of changing strategies halfway through an investment. This was originally bought as an investment to just hold long term. And now that I'm transitioning into more of a trading strategy, it feels a little bit silly to just kind of sell it when I've been holding for a couple of years on a different strategy. So I'm making slight exceptions for certain stocks until they're all aligned with the strategy that I want. But it is making me uncomfortable that it's down 30%, and there's a potential it comes down to the bottom of this channel. So I've got a stop here. I'm considering moving the stop under there, even though that's a big fall. But I do think that Impacts will be turning soon, and it is just a small portion of my portfolio, so it's not the end of the world if I do go down to like a 40% loss. But it's one I'm umming and ahhing at the moment. I'm trying to make a decision on it. So if anyone's got any advice, please drop a comment. But let's get on to the buys and sells that I made for the month of February. Actually, I'm going to pause it there to make sure that the audio is recording. Huzzah! Yeah, well, I've just paused and checked the audio is recording, so that's all good. So as I was saying, I don't know if I'll edit it out, so I'll start again. For the month of February, I made 7 buys and 2 sales, and 4 of those buys were new stocks to the portfolio, and 3 of them were just add-ons to existing positions. So I'll try and go through it kind of. I need to get onto my actual portfolio. We'll go through it kind of alphabetically in terms of, but through the different industries. So Hollywood Bowl was one of the purchases this month. So yeah, they're all going to be based on they're all going to be based on my momentum strategy. So I'm waiting for it to break through resistance in all cases, pretty much. So this one was only fairly recently added to the watch list. I've kind of been aware of it in the past, but I hadn't done my full research, kind of putting it through the checklist until fairly recently. So I had this line in here as a line of resistance. It broke through and I bought on that day. Just kind of textbook. It pulled back to this support line, which kind of expected it to do, and then it has continued higher. So far, it's been absolutely textbook, and we'll just wait and see what happens with that. So for those that don't know, I'm not going to go through big detail on what these stocks, what they actually do, because I think the video will run too long then. But if anyone does, if there is demand for it, then I might do individual videos on certain companies or a handful of companies, running through a bit more info on kind of the fundamentals of them and what they actually do. But for those that don't know, Bowl, it's Hollywood Bowl. It's a 10-pin bowling group that has centres across the UK, and it also has some in Canada, which is kind of a fairly recent addition. In the last kind of 2-3 years, they made an acquisition of a Canadian bowling, and they've got some centres out there now. But yeah, a company that I like, and similar to Crocs, which is also a new position this month. They're very easy businesses to understand, which is what I'm looking for. So I've actually been looking through some of the stocks on my watch list, and even some of the stocks that I own, because there are some that I can get my head around when I sit down and read through the annual report, and kind of in the moment I begin to, I feel like I can understand them. But then I don't look at them for a month or two, come back, and I've got to do that all over again. They're not the easiest businesses for me to understand. And I'd rather it be like Hollywood Bowl or Crocs, who make the Crocs shoes. I'd rather it to be very, very easy businesses to understand. Crocs being one of them is doing very well. Crocs have actually become quite fashionable, I think. I don't own a pair, but I think they are now kind of a far more fashionable brand than they used to be. They've paid lots of kind of influencers and stuff to kind of start wearing them to kind of up their profile. And I only researched these very recently in this kind of area. I put in this level support. It broke through this support. It gapped straight up on good earnings. And I put out an earnings snapshot for this on Twitter. Broke through, and I purchased basically as soon as I could. Ended up getting kind of middle of the move, really. Fairly not too bad an entry. And ever since then, it had a slight pullback, as I would expect, and then it's been moving on up. So again, a textbook entry. It's performing as I would expect. My stop is down here, which is just below. We had a little pullback before it went through, and I've just put it under there, which is around 10%. And I'd ideally be looking for around 10%. And once this starts, if I say once, hopefully once, if this starts kind of continuing higher and the 150 gets above this stop, I'll start moving the stop 2 points on the 150 line. Actually, yeah, something I did on the video that the sound didn't record for is I went through how I move my stop. So I'll do that again, because I think that was quite useful, just to show how my strategy is working and explain how I'm entering and exiting stocks. So Meta, terrible example with my current strategy. I mean, it's worked out very well, but with my current strategy, I wouldn't be buying here. So at this time, it passed my checklist. This was towards the start of 2022 when I started using my checklist strategy. It passed my checklist. And at the time, my strategy was to buy based on valuation. So it's below the value line, and I was averaging down, which is, as I said earlier, a legitimate strategy, but not one I use now. But now, my entry strategy would be waiting for momentum. So if we pretend that I didn't make these buys, what I would be doing now, let's say around here, I started following Meta. At each of these highs, that would be the previous kind of resistance. So I wouldn't buy unless the share price went above that line and also above the 150-day moving average, which is this purple line. There was a new one here, so I'd lower it to there. And then you could say that, but I'd probably wait more to here. It's a double point at this move. So it almost got to a point of buying, but it wasn't above the 150, so I wouldn't have been able to buy anyway. And I would just keep moving it down. And then you get to a position down here where it drops off. This would be the new level. And then it came back up right here on this day. It broke through that line, but I couldn't buy then because it's not above the 150-day. The next day it broke through the 150-day, and that is where I could buy, where I'd be allowed to buy. I'm not always going to catch it perfectly on that day. Sometimes I miss it if I'm away or if I'm doing something, but I could just then buy here or here. I'm allowed to buy it once it breaks through there, basically, on momentum. So that would have been my entry on my new strategy. And then once I've got that entry in, I have a rising stop loss, or a trailing stop loss, I think is the correct term. And I base that on the 150-day moving average. So my initial stop loss wouldn't be based on the 150. It would be a sensible point around here. So it might be below this. If I make that red, it might be below this minor pullback before it broke through. Or it might even, if I wanted to give it a little bit more leeway, it might be down to the 150. I mean, to the 50. But as it rises, each time there's a pullback, so let's say here there was quite a big pullback, I would pull that down to the 150 day. So obviously at this point, it's quite a long way off, but the idea behind that is to give the stock breathing room, so you're not going to get stopped out too easily. I'm not looking at swing trading, obviously a million miles off day trading, so I'm a position trader, I think is what I probably am now. So I'm looking at long moves, months or years. The longer the better, really, because that means it's continuing to go up. So this would keep moving up. So here, there was a bit of a low point. I'd probably move it up there, bring that down to the 150. And then we get up here, we've got a period of sideways action. The low point here, I'd bring it up, and then the low point. So that would be the stop loss all along here. This would be the stop loss. Came down here, my stop loss is still here, but once it starts moving up again, I would then bring it up to that point where it hits the 150. So obviously came quite close. And now we've pulled the stop loss all the way up, and that effectively means all of this gain, so from our entry position down here, all the way up to this stop loss, so 92% gain, is effectively locked in, because if it hits this stop loss, I'm selling. Obviously it could gap a little bit and maybe lose a bit more, but theoretically I'm not going to lose much more than that. So I'm locking in my gains. There's no chance of me giving it back. And then I continue to move higher. So here there's a new, so it would stay here, have this pull. I wouldn't move it up until this started moving up again. It did. So I'd move it up to this point where it hits the 150. Again here, and so on and so forth. I don't need to do it all the way up for you. Get the idea, hopefully. But having said that, that is the way I do things. But I've not been in this position before. That Meta is it's gone on such a run. It's such a large portion of my portfolio now. If it pulls back 25%, that's actually a reasonable portion of my portfolio. So I don't want to risk giving back that much. So on this big gap up it did earlier this month where it's 20%, I decided to pull my stop higher because I don't want to give back 25% of the gains or whatever it would be to get back to here. So I've decided to pull my stop to here, and I will let it move around here. If it pulls up, I'm not going to keeping it really tight. I'm going to let it move around. If it falls through here, that's fine. I sell, I lock in like 170% gain. If it goes sideways for a bit or carries on up, then I will let it have a bit of breathing room, but eventually move up and continue to make gains. So that's just a quick run through, because my videos, I think, are starting to get a few more than kind of 2 or 3 views. So for the new viewers, that's how I work my strategy. Right, back to buys. So we've done Crocs. Bioventix is a new position. So this is the new position here. I did buy back here. Again, terrible entry. Before I had my entry rules, there was a terrible entry. And then I had my stop loss below this trend line, which kind of went back to here. Also not the strongest trend line to use. It bounced, it went through the line I was using as my stop loss twice, and both times I was like, oh, it's just a shakeout. I'm just going to hold until the end of day, and it went back up. And then on the third one, I was like, it can't be a shakeout again. It's happening the third time. It's probably going to go down. So I sold, and lo and behold, it was a shakeout. And then it carried on up. So there you go. Then are the breaks sometimes. In this period, I think it was very low volume. Yeah, it was very low volume when it broke through. And I was a bit fed up with the stock after this. So I just didn't enter for whatever reason there. But that would have actually been a valid entry point according to my strategy and my rules. But this line where we actually used to enter was from the previous all-time high. So it broke through. Sorry, I'm moving around quite a lot here. I know that can be annoying. I'll try and stay a bit more still now. It broke through here. I didn't buy on the very first day because it had quite low volume. So I wanted to make sure it wasn't just going to kind of fall back below. The second day it moved higher. So I thought, okay, I'll enter here. And it's continued up, having a bit of a pullback. So I put in a new resistance line at the top of this pullback. And if it breaks through here, I will add to my position here because it's showing continuing momentum and strength by moving higher. And I'll raise my stop as the 150 starts to move up. Regeneron, pharmaceuticals. Let the chart load. This was an add-on to an existing position. So my existing position entry was down here, where it broke through this resistance. I bought on the second day. That's either because I missed it or it was because it was low volume. It was lower than average volume, so it might have been that. But also, I may have just missed it. Sometimes I do just, especially with the US stocks, if I'm out for the afternoon, if I'm playing golf or if I'm visiting somewhere, then I might just miss it. But that's fine. It allows me to enter on a second, third, fourth day. I sacrifice a couple of percent in some cases, but it's not the end of the world. There was a pullback to what is now the support line, and it's continued moving higher. There was a bit of a pullback here. I put in a line here because I want to add to the position. It broke through there, added to the position. Again, didn't get it on the day. This is because we've been on holiday in the end of February. So I was actually away at this period. So when I got back, I added here. It's doing a bit of a pullback. My stop's down here. I predict it will hit the 50-day and then carry moving higher. But that's all looking good. Gamma Communications, UK company. UK stock, UK software as a service company, has been in this sideways channel for kind of 18 months now, or almost 2 years. Yeah, some nonsensical buy points here. I've since, as I said a dozen times so far in the video, I've since come up with my entry strategy. Again, I was away. My wife and I were away on holiday during this period when it actually broke out. When I got home, it hadn't moved too far, so I thought I'll still add to the position. It's still a breakout. It's holding above this line. So this is a reasonable position now, and we'll see how that gets on. I was expecting, because this was such a long base, that when it broke out of here, it would actually kind of have a bit of a move, go on a bit of a flyer. But it seems to be sticking to its motto of slow and steady. So we'll see what happens with that. There hasn't been huge volume coming in, so I guess the institutions aren't buying here, which is probably what it needs to get moving. And then Wise is also an add-on. So yeah, broke through here, kind of went sideways for a bit, and has broken through this resistance here on pretty high volume as well. It's having a little pullback. And I think it's probably going to bounce off there and continue higher. But it's just every time it does that, I'm going to add to the position until I've got a total position. So yeah, those are the buys. Oh no, there's one more. Oh yeah, I don't own it anymore. Okay, so the final buy, which is also one of my two sells, Watchlist UK, is Keyword Studios. So this is a stock that I like. I like the company. I like the business. So for those that don't know, they provide support services to game developers. So they don't actually develop games themselves. Like they don't release a game under their name. They help other companies developing games. So they'll provide support services for animations and voiceovers and all of that type of thing. They just provide support services to pretty much the entirety of the game development process. But because they're not releasing the games themselves, they're not as exposed to the fluctuations in how well a game performs and that type of thing. They have more steady revenue levels than the developers such as kind of like Team 17 or Tiny Build, those types of UK companies. So I like them in that respect, but they are still exposed to the overall kind of gyrations of the game development industry to a certain extent. But I thought this was looking very strong. It's been in a downtrend for a while. It kind of did a double bottom here, bouncing off this support level at the bottom. broke through the 150 day. This line I've actually moved. It was here at the previous high, pulled back, and then I was like, right, I'm going to enter when it breaks through that line. I did that, didn't catch it perfectly, but I got it up here, and then promptly decided to fall back, which is fine, that's going to happen. So I had my stop down here just below the 150 day, 150 day moving average. Unfortunately, on the day that it fell through, it was quite a dramatic fall. I don't think there was anything particularly bad news-wise released by Keyword Studios themselves, but there was some other news that came out in the industry that had kind of a read-across effect that wasn't the most positive. So it was quite a big fall. I kind of called it, well, it wasn't the best really, towards the bottom of the day, but there was no telling whether it was going to fall lower. I effectively just sold as soon as I noticed that there was quite a heavy fall on the day because it had gone through my stop. So that actually turned out to be a 20% loss. If it had been actually on my stop, it would have been a 15% loss. So we kind of got clobbered an extra 5% just from the big fall on the day. But that's what happens. And I stuck to my rules, so I'm pleased with that. And we will just wait on this one. As I say, that line was there. I've moved it back up to the new high. So this green box means it's where I can buy. So if it breaks through there, we'll try again. And if it fails again, it fails again. But we'll just keep going. I think the success rate is certainly a lot higher than the failure rate. And that's also something we're experimenting with as well. Maybe on certain stocks it won't be, but I've got to try and just stick to the strategy and stick to the rules for a while. And the other sale was Serica Energy. So this is one that it's been in this kind of sideways channel for quite a while. Again, some buys when I was of a more value-focused investing strategy. At this point here, if we zoom in so you can't see this yellow line, the last buy. At this point here, I had a line in here going across these high points. So that's why there's a circle here. It broke through there and I added to the position here thinking it was a breakout. It fell back into the channel. And then with hindsight, now I should have a stop around here and get out of it. But I've let it fall all the way down and my stop was below the bottom of this trading channel. Again, it was quite a big fall when it fell through because I think that's what's going to happen in a lot of cases because a lot of people are going to have their stop below the trading channel. So it was quite a big fall. I got out here kind of in the middle of the price action for the day. And that was a 16.6% loss on that trade. But I'm pleased with myself for getting out of the trade. I stuck to my rules. I stuck to what I said I was going to do. And we move on. I think there's not really a great setup for this, in my opinion now. The only setup in terms of my strategy is waiting for it to get back up to the top of this trading channel, which I think isn't going to happen anytime soon. So I'm just going to wait for that to happen. Serica Energy, for those that don't know, is a fairly small UK gas and oil producer. And they used to be pretty much 100% gas. They're now pretty much 50-50 gas and oil because they made an acquisition of Tailwind. But I think their underlying business is quite good. They've just been clobbered really hard by the UK's windfall tax on the gas and oil sector. And I don't think that's going to stop anytime soon. So this is one I'm just going to keep an eye on now. There's no rush. There's no hurry to get back into it. We'll just keep an eye on it. And very quickly, so I've shown you that screenshot of the public portfolio, but this is my watch list. So all the stocks down the right here, I've broken them into industry groups. But all of the stocks down the right here, these are all the UK ones, are stocks that have passed my checklist that I'm allowed to buy, the UK ones, and these are all of the US ones. So all of these, some of them I own, and a lot of them I don't, but all of them I'm allowed to buy when there is a good setup. I haven't actually seen what Qualcomm's doing today because this was, that broke through. But I haven't bought it because I'm quite high on the total number of stocks I have. So I should say I've got 19 stocks in the portfolio at the moment, but I'm only allowed 20. So I have to be either very selective on the next stock that I buy, or I need to sell some stocks. So my thought on this one was it's not the best entry because it's already quite extended. So I was going to wait for a better opportunity, and I thought it wasn't worth selling a stock to make way for Qualcomm. But those are the kind of decisions I'm going to have to be making quite often. I don't want to have more than 20 stocks because I don't want to dilute myself too much. And that's, again, something I'm experimenting with. If anyone, I would be very interested to hear actually what other people's strategies are in terms of portfolio makeup. Like, do you have a set number of stocks that you're not allowed more than? Do you just have as many stocks as there are available opportunities? I'd be interested to hear people's strategies and how many stocks you currently own. Right, so second time recording this video. Hopefully it's all gone well this time. If you're still watching, thank you. It was quite a long video, a bit longer than I was anticipating. Yeah, and if you are enjoying these type of videos, please consider subscribing and drop a like. That would really help with the YouTube algorithms. And if there are any videos that you would like me to make, let me know. And if there's anything you think I could improve on these kind of monthly recap videos, then please let me know as well. I'm open to feedback. If there's anything you want me to add to them or cut out, if I'm waffling too much in certain sectors, just let me know. I won't be offended, I promise. I want to make them as good as they can be. And I want to look back at these in kind of 5, 10, 15 years time and see what I was doing as well. So that's one of the reasons for doing them. So thank you for watching. Good luck with your investments. And if I don't make a video before then, I will see you at the March portfolio update. Thank you.